Hey guys, thank you so much for joining. I'm super excited to share this information with you on the differences between the working for a retail lender and working in the broker wholesale model. My name is Pete Metz, and before I get started, I do want to share with you to write down your questions. You may have some questions that come up, so go ahead and write those down. At the end of this webinar, I'll open it up for Q&A. So this class is all about how to future-proof and grow and scale your mortgage business using a brand new way of originating mortgages. So I want to share with you how I tripled my income from 2024 to 2025 and increased my volume over 100% by doing this one thing. And that was leaving the retail model and joining the new way of originating mortgages. So over the years, the broker model has had some fluctuations. Before 2008, the broker model had over 60% of the market share. So every loan that was originated, 60% in the country, in the United States, was 60% of the market share. So they had a large amount of brokerage before 2008. By 2012, the broker model had shrunk all the way down to 10%. People they left out of the broker model and went into the retail model because there were so many banks and wholesale lenders that were going out of business, and they were seeking safety and finding a good, reputable company that they could go and work for. Now, if we fast forward from 2012 to 2025, and even this year, that broker model has grown. The market share is growing every single year by 4 to 5% per year. Now it's over 30% market share, and it's coming back. And that's one reason why that is a joke. But definitely, whatever you do, keep this a secret, because the broker wholesale model, we are crushing the retail lenders right now, crushing them in service. We're crushing them in rates, and we're also making a lot more money than retail lenders as well. And so definitely keep this a secret, because you'll be definitely able to crush your competition. So here's a disclaimer for you. So this webinar is not, I'm not guaranteeing you at all that you're going to triple your income. You probably won't. You may. I wasn't actually looking to triple my income. I was just looking to support my family. When I moved out of the retail model, I was just looking to support my family, because in 2020, 2021, obviously we were all doing great. We were super successful closing tons of loans. You go out and shake a tree and there were loans that fall out of the sky. 2022 and 2023 happens and the market just crashes, and the way fewer mortgages and way harder to close that many loans because there wasn't that many loans being done. And so really, I just wanted to support my family. I have 3 kids and they all are in sports and they're very expensive. They're hungry kids. So I just needed to make $15,000 a month. That was my goal. So when I found out that I could make 2.25% on every loan that I closed, my only goal was, if I just closed 2 loans per month, I could make $15,300, because my average loan amount was $340,000. So if I just closed 2 loans, I could support my family. I could put food on the table and be that provider. Fast forward 2 years later, after I joined the wholesale model, my business has absolutely blown up. I'm closing over 10 loans a month, and I'm getting paid 1099. I'm paying way less in taxes, and it's been an absolute game changer. This is Amy. She came along with me. She was one of my loan officers that worked with me. So she came out of the retail model. And before, when she was in retail, she was averaging 1.4 loans per month. And now she's doing over 6 loans per month, and her business is growing as well. And this is purely by switching models, moving into a different way of originating loans. And we're making a lot more money doing this as well. And so my name is Pete Metz. Like I said, I have been 23 years in the business. I've been doing this for a very long time. I'm from Redding, California, Northern California. I have 3 kids, like I was saying. They're hungry kids, and they're all in sports. They're all super active. I have seen multiple different markets. So I saw the 2008 crash and burn. I got in the business in 2003. So I lived through all of that era, lived through the 2008 crash. Obviously, I went through the COVID boom, which was awesome. And then obviously the post-COVID collapse that we call it in the mortgage industry. In 24, I did transition from working for retail lenders to working for a hybrid wholesale brokerage model, which has been absolutely amazing. So this is me here in 2020. In retail, I'd grown a team of over 30 people. I had multiple loan officers, over 16 loan officers in multiple different states. And this was us on a retreat that we did in Tahoe. This was all of us. I've been a part of a coaching program called L360. I'm very good friends with Tim Brahim. He owns the company called L360 and the Loan Atlas. You might have heard of the Loan Atlas. And I've been around for a while. Who is this webinar for? This is for part-time loan officers. This is for full-time loan officers and also branch managers. If you're a branch manager, maybe you're managing multiple different loan officers on your team. So my number one goal, I have two goals here. My number one goal is to show you that the fastest way for you to increase your income and future-proof your mortgage business is by leaving the retail model and joining the new hybrid wholesale model. My second goal here is to show you that Dream Big Ownership, a new brokerage that I created and I started last year, is going to be the best company for you to come and join us in this mission to help a lot of families. So how did I get started? I worked for multiple different retail lenders. These were all the retail lenders that I worked for. So I was 9 years at Megastar Financial. I went from Megastar to Loan Simple. I was there for 2 years. And then I went from Loan Simple to Celebrity Home Loans. I was there for 3 or 4 years. And then I went to OnQ Financial. I always knew about the broker wholesale channel. And the problem was that I did not realize that I could go work for a broker or be in the broker wholesale channel by just having my NMLS license. I didn't realize there was two ways to work for a broker, and that is through the DFPI or working for a DRE mortgage broker. And there's some differences there, but as soon as I found that out, and I think the rules had changed a little bit to where it opened it up to where just a loan officer that has their NMLS license can go work for a mortgage broker as long as they have their DFPI license. And so I also thought that if I went to work for a mortgage broker, that I'd be on this crazy split and that I have to give up a large part of the commission to the broker. I didn't realize that just wasn't the case. Also, I hated brokering loans because when I was in retail, I had maybe brokered 2 or 3 loans when I was in retail, but the only time I would broker a loan was if the company didn't offer that particular program. And then I just really avoided it altogether because the bank that I was working with, they had 2 or 3 wholesale lenders that I could broker to, and they didn't really have the best service. And so there wasn't a lot of choices. Anyways, I didn't really like brokering. And so these are things of why I delayed and why I didn't actually move into the broker wholesale channel sooner. I also thought that the processing and underwriting support were going to be terrible. When I was in retail, all my managers, everyone would tell me that you're not going to have the best service. You're not going to have the good underwriting turn times. Your closing process is going to be terrible. So these were all lies and myths that I had before I made the switch. But come to find out, when I did make the switch with this new hybrid wholesale model, my business actually took off. I did more non-QM loans my first year working for a broker than what I did in the last 15 years in retail. And it's absolutely amazing, some of these programs that are available and being able to make full comp on those loans. I started closing 4, then 7, then 8, 10 plus loans per month over the last 2 years. So it's absolutely taken off. And because of that, I'm able to not just provide for my family like what my goal was. I'm really able to really do some amazing things. Like we're able to travel more, where what we did in 2020 and 2021 when loans were just raining from the sky. I'm able to travel. I took my family on a vacation last year to Hawaii. We went to Kauai. This is us in Kauai. And so we were able to make some really amazing memories together and great experiences. So after the last 10 years, I discovered the hard way. So working in retail shop, I had no idea that was completely the hard way to originate loans. If you've been struggling, this is probably why. In retail, they tell you to stay off the subject of rate because you're given a rate sheet and they say, here's the rate sheet, stay off the subject of rate. And what you want to do is you want to be an advisor and you want to sell your service and really give them your value proposition that's not rate. And my point of view is why not have both, right? Like why not be able to be a really good mortgage advisor and offer really good service to your customers and really good advice, but also have amazing interest rates and have really good loan products that you can stand behind and really be confident in your entire business. Giving 40 to 50% of your check to the IRS as a W-2 employee or as a W-2 loan officer, 50% of your commission is taken by the IRS. You got the state taxes, and then you also have the federal IRS taxes. And giving 50% away in my tax, that's the number one expense that retail loan officers have, and they don't realize it, is the IRS. You pay 40 to 50% to the IRS. You don't have that in the wholesale model because you can get paid 1099. And I'll give you an example. So when I switched over to the wholesale model, my 3 kids, I hired them all as employees. They're all under 15 years old. So I had them go down to the county and get work permits. So they went and got work permits, and now they help me. So I do 4 past client events a year. And so their job is to help me pass out flyers and help greet the customers when they come in and be there to help with the games and the setup. They help with the setup and the teardown of all my equipment. And so for that, I give them each $6,000 a year. It's a tax write-off for me, and they don't have to pay taxes either on that income. So there's things like that the IRS gives you that you don't have that privilege working in retail, getting paid 1099 or getting paid W-2. Only making 100 to 150 basis points. That was a big frustration as a loan officer, is getting paid 100 to 150 basis points when you know that the total amount coming in, your branch manager might be getting an extra 100 basis points, and then the company's taking 100 to 200 basis points. Missed opportunities. So there were so many missed opportunities that I had during my retail career that I just passed on the loan, non-QM loan, bank statement loan. I just passed on them. It's not that I didn't have the product. It's because I was just embarrassed about the product that I was offering, because for non-QM, the retail lenders, they pad the margin so high, the client was having to pay 2 points up front, and then the interest rate was higher as well. And I just didn't do those loans because I didn't think it was a great product to give my clients. But come to find out, that is not the case at all. It's just the retail lenders are taking so much margin there. No control over clients, emails, and brand. When I switched from retail lender to retail lender, they hold you captive. They hold you hostage, because if you don't like something about the lender you're working with, let's say you don't like the turn times, or you don't like the management, or anything about the business that you're in, part of the business that you're working for you to switch, you pretty much have to shut down your business. Like, it's very hard to switch because they have your email address. They control your email. They control your database, your CRM. Most companies don't let you have a CRM that you want to use independently. So they have your customers' data. And when you make the switch, it's, oh no, you can't take that with you. And oh, you can't have that email address, and we got to shut you down. So you have to basically start over when you make that switch. Very challenging. So they hold you hostage. Corporate overlays, hidden corporate margin, the transparency. I don't mind retail lenders making a margin. I don't mind them having profit on the loans that I was originating, but just be honest with me. Tell me the exact amount that you're taking, and don't lie to me. Don't tell me you're only have this much margin, but you're really taking more. And it's pretty easy to tell over time if you've been in the business for a while. Turn time frustrations. So I want to show you the 3 secrets of the wholesale hybrid model. There's 3 secrets that has really helped my business and completely changed my life over the last 2 years. Secret number 1, rates and products. How can you ethically deliver lower interest rates to your clients while still earning 225 basis points on every single loan that you close? Secret number 2, how our LOs can earn over 275 basis points. How can correspondent options give you more flexibility, and how you get paid beyond the typical broker comp maximum of 2.75%. Secret number 3, loan officer support. So how can wholesale support help you close faster and more consistently than retail could ever do for you? So we're going to talk about these 3 secrets. Secret number 1, how can you ethically deliver lower interest rates to your clients while still earning 225 basis points? Okay, what most loan officers are taught, like I was saying before, Sell service, not the rate. Ask for concessions if you get shopped. So consistently asking for concessions. Obviously, if they've started shopping, that's bad because you might be able to save it with getting a concession, or sometimes you're going to lose that deal. Don't worry about what we make, just sell the rates you can offer. I came across this website before I got into the wholesale model. This is called Loan Sifter, and it's offered by Optimal Blue. Any loan officer can actually go to this website and you can subscribe. So it's $85 a month, and you can actually look up wholesale lenders. So this is every single wholesale lender. It's actually not all of them, but look how many wholesale lenders there are that you have to pick from. To get approved with one of these wholesale lenders, it takes 24 to 48 hours to get approved. So literally, you could have every single one of these lenders. You could have options with any single one of these lenders, and they all are competing for your business. It's absolutely huge, and they all are competing on interest rate as well. Why is retail rates higher? You may already know this, but I'm going to share it with you anyways. On the retail channel, how it works is the loan officer is going to make 125 basis points, maybe 140. Management, maybe the branch manager, middle management, they're going to take 100 basis points. And then the bank, they're going to take the lender, they're going to take 100 to 200 basis points as well. So all in, by the time you're delivering this rate sheet to your customer, there's 300 to 400 basis points built into that price, and your interest rate is a lot higher, and the customer is going to shop you. They're going to know it. If they're smart at all, if they're able, they can easily go to Google and start searching. Anyways, this is why the retail model, I think, is broken. In the wholesale model, loan officer gets 225 basis points. And then the bank or the lender that you're going to work with, they're going to be about 50 to 75 basis points. So all in is way less than what you're all in with the retail shop. One of the best things that I did for my business after I switched into the wholesale model was, because I'm so confident with my interest rates now, I post them live on my website. So because I have my interest rates on my website, I got 10 loans last year that I wouldn't have had otherwise, all that came from having my live interest rates on my website. And if you come to work for Dream Big Ownership, we actually provide your website and you get live interest rates on your website. Having live interest rates on your website allows you to be super, super transparent. So I'll tell you a story. So last year, I get a call from a customer, and they were working with a local retail lender. And they came across my website, and they hit my website because I advertise having live interest rates right there. They don't have to give their email. They don't have to do anything. They just can see what interest rates I'm offering. They saw my interest rates, and my interest rates had the 2.25% built into the pricing. And they were like, "Hey, Pete, this seems too good to be true." They were being offered 6.875, and the lender was charging them 1.5 points. They went to my website, they saw 6.375 with no points, and that 6.375, I was making 2.25% on the loan. And so they literally were saving $8,000 in points, plus they were getting 0.5% lower in interest rate. So they were already 1 week into the process of their loan. And this is what I told them. I said, "Hey, this is what's going to happen. You see my website, I'm very transparent. This is definitely what I'll offer you. The good news is you're going to get a better deal no matter what if you stay with your current lender." But what I told them is, they said, "Hey, when you go back to your lender, this is what's going to happen. They're going to say, 'Oh, yeah, we'll drop that down for you. We'll drop that down to 6.375, and we'll take care of the points. We won't charge you points.'" I told the customer this is exactly what they're going to say. And I also said to the customer, and this is the key, I said, "But here's the problem. If they're going to give it to you now, why didn't they give it to you in the very beginning?" This is the retail game. The retail says, "Hey, sell our rates, and if they shop you, then we'll give you a concession." Here's the problem. They should have been offering that rate from the very beginning. And so I got 10 extra loans last year, all from having transparent interest rates on my website. And you can have transparent rates on your website as well, because you're going to be confident in your pricing. So that was secret number one. So this is how you can make 225 basis points on every loan and have a lot lower interest rates for your clients. Secret number two, how a hybrid broker model allows a loan officer to make more than 225 basis points on a conventional VA and non-QM loan. Okay. Here's some myths. Here's some myths about the broker wholesale channel. Your max is only 2.75. You have to disclose your compensation on the LE, and there's no lender credits or locks, and no lender credits for locks and or closing cost credits. So these are all myths. This wasn't true whatsoever in the wholesale model, especially if you work for a company that's a hybrid. And when a hybrid, it's the broker wholesale model, broker and correspondent model. So we have two channels to originate your loans. So you have the broker channel and you have the correspondent channel. Okay. As a retail lender, you work for a retail lender and you can bank through the correspondent channel. They also allow you to broker. So when I worked in retail, I could broker if I wanted to, but here's the problem. I wasn't able to broker for price. I couldn't broker to a wholesale lender. I had to use the bank that I was using, that I was working for, and I could not broker that deal to someone else because they offered a lower and better rate to the customer. It's the exact opposite in this hybrid model. So we have the ability to broker, and you can broker for price, you can broker for product, you can broker for anything. But we also have a correspondent line of credit that you can use for your conventional, your VA, and your non-QM loans. And I'm going to give you an example of the two differences. On the broker channel, your max comp that you can technically make is up to 2.75. We set our comp at 2.25%. We want to stay competitive, and I think we are competitive and able to offer our loan officers really good pay. There's hundreds of lenders to choose from, like I was showing you in that loan sifter tool. You have unlimited loan products. So any loan product that's out there, you can offer 1099 W-2 comp plans. So obviously you can get paid 1099 versus W-2. And I already shared the benefits of getting 1099. And then the different comp plans for purchases and refinance. So you can have obviously different comp plans, just like you can in retail. If you wanted to, you could set your comp plan at 1.5% for your refis and get more refis. And then your purchases you could set at 2.25%. The correspondent channel, there is no max comp. So you can actually make more than 2.75%. And the beautiful thing is you're not required to use the correspondent channel. This is only there when you want to use it. You can charge points and you can also get rebate. The yield spread premium is not disclosed to the client. You can get paid 1099 or W-2 options as well with the correspondent line, and there's no commission caps. So I want to tell you a story about no commission caps, because the retail lenders say, hey, Pete, we're going to make sure you have a commission cap. So my commission cap when I was working for retail, I couldn't make more than like $8,000 on a loan. That's probably pretty standard. Sometimes maybe you might have a $10,000 commission cap. But here's the problem. This customer came to one of the loan officers that works with us. This customer is a large loan amount, so he needed a $2.1 million loan amount. So he went to a retail lender that had a commission cap. So the retail lender quoted him $2.1 million loan amount, an interest rate of 7.5%. This is about a year ago on a bank statement loan. And that retail lender was going to charge him 2 points. So that loan officer was probably going to make $8,000, maybe $10,000 on their commission cap. However, with this pricing, the bank, the retail bank, they were going to make what the difference was. And I'm going to show you what that difference was, because our loan officer that quoted him, he used UWM as the investor. The interest rate he quoted him was 6.875, 0.5% better in interest rate. The price or the rebate on that, this is through the correspondent line, so you could max out his commission. The pricing was 103.5. So he made 3.5 points on the back end of the loan. So he had $70,000 of commission, and then he charged the customer 1.5 points, which was cheaper than the retail lender. So the loan officer made $100,000 and paid $750 to the brokerage. That's all the brokerage got. And the loan officer was able to capitalize on that commission. Here's the problem is the retail lender, they would have made $90,000 but the loan officer would have made only $8,000 to $10,000 in the retail model. Absolutely highway robbery with these retail lenders. So that's just one story about the differences with retail versus the wholesale model. Okay, secret number 3, how wholesale support helps you close faster and more consistently than retail. Okay, so this is a huge myth that a lot of retail lenders tell, a lot of management tell their loan officers, you're not going to have the support. So the myth is you can't control your underwriting turn times. You won't have any underwriters to talk to. You have multiple different lenders with multiple different systems to log into. Yes, that's true. You can have a couple that you really love and work with them. You can't control the closing process, which also isn't true. So here is the big mindset. This is huge, a huge mindset. When I moved out of the retail channel and into wholesale, here's the mindset shift. In retail, I worked for them. I was the one working for the bank. So I made this image from ChatGPT. I thought it did a pretty good job. So as a retail lender, in retail, the loan officer works for the bank. If the loan officer is upset, they have to uproot their business, and that is very difficult. It's extremely difficult to move lenders when you're in retail if something happens you don't like, okay? The difference in wholesale, the banks work for you. So in wholesale, the lenders work for the loan officer. If the loan officer is not happy, the loan officer can go find a different bank to send their loans to, creating competition. So if I'm not liking the service that I'm working with, the bank that I'm working with, easy. I make the move with the very next loan. Nothing happens to my business. I can't do that in retail. So what happens there is the wholesale lenders know this. They completely understand that they work for us. And if they don't provide us with good service, with good closing, answer the calls with underwriting. The first loan I did in wholesale, I submitted the loan. I got a phone call the very same day I submitted that loan. It was UWM. They said, hey, thank you so much for the file. I just approved your loan. By the way, here are the conditions. Do you have any questions? Didn't once get that in retail. Maybe sometimes an underwriter would call me, but it's on every single loan. I got to the point now where I don't take those calls, but they're still calling me. If I have a file, I need to talk to them, boom, they're right there. And the mindset shift here is that they're working for us. They know that I can go work for any other lender. I can send my loans to any other lender that I want to. That's why they're constantly improving their service, constantly helping us. And in fact, the account reps, the account executives that work for these wholesale lenders. So these are just some of the things that they help us out with. They train and teach my team. So I just hired an LOA, a brand new LOA. She had been in the business, so she was knowledgeable, but she didn't know my system. She didn't know the wholesale model. So I had multiple AEs for the wholesale lenders I work with. They called her, spent multiple hours with her, teaching her how to do the disclosure process, how to work the system. They're teaching my team. And I had to teach before. I had to be the one that teach them how to do disclosures. I had to teach them Encompass and how to work Encompass. So it's absolutely a game changer. They also help with pricing and lock strategies. They help file navigation, their product expertise. I can call AEs and they can tell me the product or the different niches or the different things that I need to watch out for if I'm sending them a specific type of loan. The underwriters, they answer their phones. So if I need to talk to an underwriter, every single one of them are taught and trained. Hey, you have to take the calls from loan officers no matter what. They take our calls. They pick up their phone. They give us clarity and predictability. I just had a file that I submitted. The underwriter calls me and they said the borrower had variable income. And he had been 11 months on the job as an FHA deal. So obviously I know the rules, but it was a challenging file. So the underwriter calls me and say, hey, Pete, it's variable income, but here's what I would recommend you do. Get a letter from the employer. Just say that they do consistently work 34 hours a week and get a letter from them. If we get that letter and we can get just the most recent pay stub to show 34 hours, I'm fine with the income. Boom. Awesome. Amazing. Got the letter, got the pay stub, boom, we're off to the races. I never had that in retail. They help with problem solving. Like I said, that underwriter was helping me solve the problem. She knew there was an issue. She called me, said, hey, here's a solution that you can have. Also with processing support. So there's third party processing you can hire. There's literally thousands of processors that are contract processors. And so you'll have all the support that you need in the wholesale channel because there's so many processors that are eager and ready to come and help you with your loans. With processing, you can actually charge the processing fee on the LE in addition to what your comp is. So it doesn't have to come out of your comp for the cost of the processor. You can actually charge that as a third party fee on the LE in box B. And that way it doesn't come out of your comp and your processor is taken care of. Super awesome. They help with file setup. They also will do your LOA work. They'll do your processing work if you want to. So you get tons and tons of support, more support than I ever could have imagined working for retail. And again, the mindset shift was they work for me, I don't work for them. So that's the big mindset difference here. Now you can see how wholesale support helps you close faster and more consistently than retail ever could. Okay, so we just hit our 3 secrets. Secret number 1 was how you make more money and also offer lower interest rates, how you can close your loans in the correspondent channel and have all of the benefits there. If you want, you can make more than that 2.75 or 2.25%. And then secret number 3, you get tons of service, tons of great customer support and all and processing with the AEs and with underwriting and closing. Okay, so here's the thing. Let me ask you a question. I know this was a lot of information to go through. You might have questions. You might have things like, hey, how would I actually do this? How would I go about making the switch? What's the process? I'm going to share with you what I would recommend you do and how I can help you and your business and show you what we can offer you here at Dream Big Ownership. So at Dream Big Ownership, you get 100% of the commission. The only thing we charge is $750 per file, and we'll pay you $10.99, or you can get paid W-2 as well. It's up to you. I don't care how you want it, but you can pick which way you want to go. We have wholesale and correspondent channels, so you can use the correspondent line, or you can broker out to different lenders that you work with. Dedicated processing and LOA support. So we do have processors and LOAs that can help you with support and help you with your files and get you going and also help grow your business. We have a branded website for you. We also allow you to have a DBA. If you want to have a DBA, you can have your own brand if you join us. With the website, we can help you get live interest rates on your website if you have one, or we have a website we can get you connected on. It's also your website, your domain, you control it, and it's all customizable and you can update it at any time. We have a dedicated CRM. We don't own the CRM. You would own the CRM. So it goes with you no matter where you go. We use a web-based LOS system. It's called Arrive. It's the best LOS system, in my opinion, that's on the market right now. It's web-based, so you can use your Mac. You can use any computer that you want. No more Encompass and waiting hours and hours for it to go to the next screen. You have a dedicated transition team. We have a dedicated team to help you with your transition and helping you with your files, moving from your current loan channel that you have now. And if you were to make the transition, and then we are licensed, we're getting licensed in more states, but we're currently licensed in California, Oregon, Washington, Texas, Indiana, and Florida. We are working eastward, and our goal in the next 24 months is to be licensed in all 50 states, or at least most of the 50 states, and we're going to work our way east from there. And the last thing here that I'll share with you is making a move. It's not the same for everybody. Most people are going to have different ways and different things happening, and changing companies is not easy and needs a strategy behind it. So what I'm offering is I would love to meet with you. If you wanted to book a one-on-one call, you can go to my website here, pricing.dreambigownership.com/book. You can book a one-on-one call with me, and obviously it's confidential, and we can talk about your strategy, talk about your business. And it may not be the right move for you today. Sometimes it does take some time, but at least you can get some information. We can strategize on your specific business and start showing you what it takes to make that transition into our mortgage brokerage. Thank you so much for attending. If you have any questions, definitely now would be the time for a Q&A, and I'll go ahead and open it up. And if you have to get off the call, thanks again, and hopefully we'll talk to you guys soon. See ya.